Welcome to this lecture on the COVID-19 extended support measures. My name's Dean Wootton. I'm recording this lecture on the 25th of September 20, and that's based on information available at that date. We are expecting further detail on the announcements, and we'll cover that when it comes out. But for now, this is what we know. So first up, we've got the Job Support Scheme. Now, the government is aiming to support short-time working as an alternative to redundancies once the job retention scheme comes to an end at the end of October. Now, this new scheme, the new support scheme, will run for 6 months from the 1st of November 20. Now, neither the employer or the employee need to be claiming under the job retention scheme, but the employee must be on the payroll as at the 23rd of September 20. So just like you need to be on the payroll as at 19th of March 20 for a retention scheme, we now have a new date for the job support scheme, 23rd of September 20. Now you can come off the job support scheme and go back on, but each short-time working arrangement must cover a minimum of 7 days. And I'm thinking that's 5 working days plus the weekend, so a week. Now, as under the flexible furlough scheme, the employer will continue to pay the employee for the work actually done. But to qualify for the job support scheme, the employee must be working at least 33% of their usual hours. That 33% will be reviewed in 3 months' time, i.e. 3 months once the scheme's in operation. And there's no chance of that going down, but it may well go up. That's the intention. So the employer pays the employee for every hour worked. Now, for every hour not worked, the employer will pay 1/3 of their normal hourly rate, plus employer's NIC and pension on that amount. The government, they will pay 1/3 of the normal hourly rate as well, but they will subject that to a cap of £697.92 per month. And most importantly, the employer must realise that they will cover the employer's national insurance and pension on the government's contribution. So the employer is responsible not only for the ERS and pension on their third, but also the ERS and pension on the government's third. The employee will bear the cost of the remaining third by way of a salary reduction, and there is no possibility of employer top-ups under the job support scheme. Now, we're not entirely sure what normal hourly rate will be, but I'm fairly certain it will be on a very similar principle to how they worked out the retention scheme. But the dates may well be different because we've got this on the payroll as at 23rd of September 20. So it can't be based on the pay as at March because some people wouldn't have been on the pay roll as at March, but they are as at September. So more details is needed on that, but it should be broadly in line with the principles that worked under the furlough scheme. Well, let's look at an example of how we believe this will work. So let's say I've got an employee who has usual earnings of £2,400 per month, that's gross. Now from the 1st of November 20, let's say he's going to work 40% of his usual hours. So therefore they will qualify for the job support scheme because it's over 33%. Now the actual working time in money equates to £960. That's 2,400 times 40%. The hours not worked equates to £1,440. That's the 24 less £960. Now of that £1,440, the employer bears £480, so 1/3. The government, they will cover another third, so £480 for them as well. Now that is under the cap of £697.92, so the government will have the full £480 being paid to the employer. And the employee will bear the other third by way of a pay reduction, so £480 lower than they normally earn. Now this individual's payslip will then show gross pay of £1,920. That's the £960 when they actually worked, plus the employer's 1/3 of £480, plus the government's 1/3 of £480, so £1,920 in total. And most importantly, the employer will pay all the ERS NIC and employees' pension on that 1920. So let's look at one or two other points on this area. So we've got grants being claimed online from December 20, and we paid in arrears on a monthly basis. It's not like the furlough scheme where if you worked it right, you could get the grant before you had to pay the employees. You can't do that under this one. You have to pay the employees and then you claim the grant in arrears. Now, employees cannot be made redundant whilst under the job support scheme. Again, that's different to the furlough scheme, because under the furlough scheme, employers could give notice of redundancy, but for the whole 4, 5, 6 weeks notice period, say, the individual could be on furlough and the government would be paying the grant, the furlough grant, to the employer for that notice period. You can't do that under the job support scheme. Short-time working must be agreed in writing with the employee, as it was under furlough. Now, HMRC checks will be made, and they'll be making checks just to ensure that grants are only being paid when they are eligible. Now, large businesses were required to demonstrate that they have been affected by COVID-19, and they are not expected to pay dividends when claiming the job support scheme. Now, that is important more from what it doesn't say, because that means that for small or medium businesses, they don't need to demonstrate that they've been affected by COVID-19. And also, they could pay dividends, because this restriction only applies to large businesses. Well, the Chancellor's announcements, the big one was obviously the job support scheme, but they also announced some extensions elsewhere. Now, we have an extension to the Self-Employed Income Support Scheme. Now, the second grant closes on the 19th of October 20, and there'll be a third lump sum for those that are currently eligible. So I'm thinking that means that they have to have claimed the second grant because you'll be currently eligible. Now, the claimant needs to be trading at a reduced level due to COVID-19. And that third lump sum will cover the 3 months from the 1st of November 20 through to 31st of January 21. And the grant that's claimable by the self-employed person will be 20% of the average monthly profits times 3. And it's subject to a total grant cap of 1,875, so a lot lower than the previous two. Now, effectively, this caps the average monthly profits at £3,125. And we then get the 1,875 cap. So 3,125 times 20% times 3 months, 1,875. That is the maximum grant under the Self-Employed Income Support Scheme extension. Now, that's for the third lump sum. There is a fourth lump sum planned for the months February, March and April 21, but no details have been released as yet on that. We've also got a VAT deferral extension. So businesses that deferred their VAT that was due in March through to June 20 were due to pay the deferred amount by 31st of March 2021. Now, many businesses have already paid over their deferred amounts. They weren't as badly affected as they thought, but many were waiting until March 21, hoping that they have enough money at that point to pay their deferred VAT from normally their February, March or April 20 VAT returns. The Chancellor has announced that businesses will now be able to make 11 equal instalments spread over the period to 31st of March 2022. So the deferred amount does not have to be paid by 31st of March 21. It can be spread over 11 equal instalments up to 31st of March 2022, and there will be no interest charged. HMRC are going to put in an opt-in process in early 2021. So it looks as though it's quite an automated opt-in. So whatever your deferred amount looks like is going to be spread equally over 11 months up to 31st of March 22, and you just opt into this. We've also had an announcement that the 5% temporary VAT rate that was due to end on the 12th of January 21 is being extended to the 31st of March 21. So we have a 5% rate for hospitality holiday accommodation at admission to certain attractions from the 15th of July 20 to 31st of March 21. So it's around about 2.5 months longer than we anticipated. Now, many businesses are not expected to pass a reduction on to their customers. Many aren't. They're keeping the menu prices the same. This is supposed to benefit these businesses that really did struggle through lockdown and beyond. So it is a measure for them. So the menu prices are staying the same. There is no legal requirement to pass that saving on. For business customers, the cost of subsistence and staff entertaining will therefore increase. So businesses are paying the same amount for food, etc., but only recovering 5% of the amount they always paid. So therefore the cost will be greater. So two sides to this really. We've also got an enhanced time to pay arrangement for those 31st of January 21 bills. So taxpayers will be able to set up time to pay arrangements for payments that fall due on the 31st of January 2021. That'll be their deferred 31 July 20 payment on account for 1920. That's if they did defer. It'll also be the balancing payment for 1920, and that'll be the income tax, CGT, Class 2 and Class 4 national insurance falling due on that day. And then the first payment on account for 2021. So the three amounts that fall due on the 31st of January 21. Now for liabilities up to 30,000, we'll be able to use a self-service, that'll be interesting, time to pay facility to agree a plan with HMRC. And we can spread our 31 January 21 tax and national insurance bill over 12 months. So that's a welcome relaxation when cash is tight. Now, these arrangements must be set up before the 31st of January 21. There will be no penalties, but interest will be charged. I mean, the amount is due on the 31st of January 21, so interest will be charged if we don't clear the amounts due by the 31st of January 21. If a taxpayer fails to make an agreed payment without contacting HMRC, the whole arrangement can be cancelled by HMRC and they can start proceedings to collect the outstanding amounts. So what they're basically saying is talk to us. Don't let it run. Talk to us, and then we'll see what we can do. Those with liabilities over 30,000 will need to agree a time to pay arrangement, not via the self-service system, but via the dedicated coronavirus time to pay helpline. So help will be available, but not this self-service system. The final announcement was on loans. I think the most common loan is the bounce back loan, so I'll focus on that one. Now, the government has announced a pay-as-you-grow loan payback scheme. Now, the scheme includes extending the repayment of the bounce back loans from 6 years to 10 years. So the bounce back loans at the moment are 6 years. We don't pay anything for the first year, and then we have to pay over the balance effectively, equally, over years 2 through to 6. So that's currently how it was working. But the announcement was the ability to extend the repayment timeframe from 6 to 10 years. Furthermore, there's provisions which allow the struggling businesses to make interest-only payments, or, if they're really struggling, suspend payments entirely for up to 6 months. So what I understand on this, it's a 6-month arrangement, so you could make interest-only payments for 6 months, or suspend your capital payments for 6 months. The banks don't really know too much about this, to be honest. I spoke to a bank manager when this was first announced, and they were in the dark. They just knew they'd been extended to 10 years, and with the ability not to pay interest for not only the first 12 months, because the government cover it for that, but also for another 6 months. So more to come on that, but it's helping the taxpayers. No business using this pay-as-you-grow will see their credit rating affected. And we also got similar extensions to the bigger loan scheme, so the business interruption loan scheme. That will have extended payment terms. They also confirmed that the deadline on loan schemes will be extended to the end of November. So we don't know too much about these provisions other than We are going to get more details when the time comes. Obviously, we're quite a way away from being required to make the first payment under the Bounce Back Loan Scheme. So therefore, by the time we are due to make payments, then we'll have plenty of detail. But essentially, you can extend the repayment period from 6 to 10. And if you're really struggling, there is further support for 6 months, say. Well, that concludes the lecture on the COVID-19 extended support provisions. And just to remind you, this was recorded on the 25th of September 20. Any further details that come out for the announcements, we will cover in future months. Well, thank you for listening to this lecture. My name is Dean Wotton.